session entitled A Response to the COVID's Destruction of the Global Economy and Its Impact on Investments. When we talk about investments, we're talking about your RRSPs, RESPs, TFSA, maybe even a cash account. Now, you're going to watch this either on a YouTube session or through a podcast. Of course, when we look at the podcast, if you're listening to a podcast, you won't be able to see the slides. But if you want to see the slides, look for Train to Invest YouTube. I wanted to just quickly tell you about Train to Invest. You see the website up there, www.train2invest.com. Train to Invest is North America's leading investment education and training corporation. The corporation purpose is to provide a new way, that is a paradigm shift, where families, individuals, or communities think about wealth management, a new way of thinking about wealth management. Unfortunately, there have been many companies running around saying they're wealth managers when in fact they are salespeople selling mutual funds. Train to Invest achieves this new type of thinking through teaching, training, coaching individuals in the art and science of self-directed investing with the foundation based on capital preservation. Our focus is on quality companies that form the backbone of the country. We do not chase after IPOs or penny stocks or the venture capital. We're strictly focused on the TSX because it's very important to protect your capital. Train to Invest offers a complete education and training experience focusing on a number of things, including fundamental and technical analysis, risk analysis and risk management, and developing skills for execution in virtually every trading situation. Empowering families to begin a journey of building their inheritance for the next generation through investment education. It's important to recognize that often university education, even an MBA, doesn't teach you how to become wealthy. You become wealthy through investment in various entities. For example, you can buy real estate, you can buy franchises, you can buy stocks and shares, but for us, the primary importance would be in the stock market. We began Train to Invest in 2004 and have trained thousands of families across Canada. The program is a complete solution that removes the fear associated with stock investing, which paralyzes most individuals. There has been so much of stories about people losing their shirts and their money, and very few articles on people who have really made wealth through a stock market. Given this preconceived fear, they abdicate the management of their hard-earned savings to experts who legally rob them because these experts receive their fees regardless of the fund's performance. The reason we get or allow ourselves to be robbed is because of fear, a fear that has been masterfully created by the financial services industry. Individuals learn at their own pace under the Train to Invest system because we realize that no two individuals learn the same way or at the same pace. We want the next generation to develop a skill set which has never been taught or hasn't been taught yet at college or at university level. And that is the precise, concise version of what Train to Invest does. It is an institution that takes a complex subject, breaks it down into bite-sized pieces, and only teaches you from the practical standpoint of how to build your wealth. Okay? We're not here to teach you theories. We're not here to give you the press 3 buttons and become Bill Gates. What we want you to do is to go through a process, learning bits by bits over a 6-month time frame. And you can read all about this and website. You also can look at our brochure called The Stock Market, The Untold Story, where you will understand how the financial services industry has come to take away your money. You can follow us on Facebook. If you follow us on Facebook slash Train to Invest, you will see really up-to-date articles from all over the world, from Asia, from China, from Australia, from New Zealand, from India, from Middle East, from Europe, from South America, and North America. If you follow us on twitter.com Train to Invest, you will hear events that have taken place within the financial services industry, political events, and things like that. So from these three areas, hopefully you will glean what Train to Invest does. Now, why did we put this together? Very recently, actually on June the 29th, Morningstar Research Corporation put together 10 Canadian equity mutual funds that have outperformed their peers. Now, the article basically talks about the 10 top of the line mutual funds. And on your right-hand side, I put the chart or table, which lists these funds it shows you the inception date, some kind of a rating within the Morningstar criteria, year to date for this 2020, that is the 6 months, 1 year return for 2019, and the 3-year annual return for the past 3 years. Now, the MER really stands for management expense ratio. That's the cost which the fund charges you for producing the result. Now, let me tell you very clearly, this is the this is the cost that they will have to legally show you. There are other costs that are there that you don't have an idea of what it costs, okay? It's hidden. So let's look at the first one. It's called BMO Canadian Stock Selection D. The MER, the expense ratio, is shown as 1.16. It began in 2014. It is 5 stars. The year-to-date return, total return, is negative 8.66. Last year, it was negative 3.11, and the 3-year annual return was 3.64. Not very good if you incorporate inflation. So we looked at all those, some go down as much as negative 14.37, almost 15%. And so we picked the best one. We picked RBC Trend Canadian Equity Fund D. It has a MER of 1.06. It's year to date for the 6 months 2020, it had a negative 5% return. So if you look at the loss for the fund, that is the negative 4.94%, you add to that the MER, the expense ratio, 1.06%. And if you add inflation at 2.5%, it's a little higher than that, but we will run with 2.5%. You have a total loss of 8.5%. So for every $100,000 that you have, you're losing 8,500. That 8,500 could be invested in some other thing and get another return on that. So you are losing a double whammy here. So you have paid the mutual funds fees for them to lose your money. And if you added inflation, you're a major loser. So that's the reason why we highlight this particular topic, to tell you what is the real story about this COVID that has decimated the global economy. Well, let's look at this chart. It's a TSX chart, which shows from March 30th to June 22nd, the TSX moved from 14,500 to almost 18,500. You see it going down and then up, sideways, up and down. But the general overall trend has been upward. And here is where lots of our clients made a lot of money. Unfortunately, for the general retail trader or the ones who own mutual funds, they are losing money simply because mutual funds really, they don't really take care of the fund itself. So the headline here is stop. Stop listening to talking heads. Why? In 1 year, you will have all kinds of gurus, experts, hindsight champions, BNN talking heads will give you ideas. I mean, you are watching television and listening to this guy spew stuff about the market. Why do you think he's on television? He's not there to teach you. He's there to entertain you. And you are listening to him, believing his stories and trying to uh, make a trade. And this only gives you a headache. And in your subconscious, all fears are brought up, fears of failure, risk profiles are not discussed. And the result is confusion, where you will start looking for tips in the wrong places. Now, in the left-hand side, there's a chart which says the number of gurus, and on the x-axis, you have a whole lot of percentage. These are the percentage of correct predictions. So based on all of these, we have the answer is that of all the predictions, they are 50% correct, which means they are 50% wrong. Now, anybody throwing darts will probably have the same average. So that's why we ask you to stop listening to talking heads. Instead, let's look what happened 6 months ago. And from this chart, you see 6 months ago, the market has been moving between 15,000, 16,000, 17,000. July, August, September to December 2019. And here, a lot of retail investors missed out because they were whining. They were whining that the market is too high. There was unbelief. They said President Trump was not presidential. He was a crazy guy. But yet, they didn't take into account the new trade deals that were done, the deal with NATO, where they are paying for the military buildup, how he shut Kim Jong-un up, how the good economic numbers, for example, unemployment was 3%. That is unheard of in this modern day. Now, on the other hand, the talking heads continue to fuel this fear, saying that China will win, this cannot last, there's inflation, there's an asset bubble, there's collusion with Russia, then they changed it to collusion with Ukraine, and so on and so forth. All this while creating and fueling fear for the retail investor who thinks that these so-called talking heads on television, on internet, and newspaper are experts, when in reality they are not. So at the bottom line is these people, the millions who listen to them, lost out on the market. Well, let's look at 3 months ago. 3 months ago, the market fell 7,000 points in March and in April because of the COVID. A great fear fell upon the nations. COVID will kill everyone. So people started running and buying gold, buying toilet rolls. Don't go out, they said. Don't breathe, they said. Don't sing. And the talking heads said, yeah, we told you so, that the economy cannot recover from this tremendous disaster. The vaccine is impossible. We can't get a vaccine for 10 years. Hundreds of thousands of people will die. China will eat US lunch, and so on and so on. The fear level increased, and greater fear came upon people. And the economies were closed. Countries were shut down. Thousands, 22 million people in the US were without jobs. That was the type of fear that had. So the question is, what drives the stock market? It's the economic growth that drives stock market. You are not going to put your money in a losing company, right? You buy a profitable company. So there is a battle between the COVID plague versus the opening of the economy. If there are more cases and more deaths and more closing of businesses and the vaccine is delayed, more bankruptcies, of course, the COVID news hits high and the market slowly tanks. However, if there's a potential for vaccine and there's positive economic news, liquidity being poured into the economy, then you see the stock market starting to move. So this is the battle that is constantly being played in the last few weeks, the last few months. COVID is winning, or is the government directing the economy? All right, let's look at what is the current level of the COVID challenge. This map of the globe shows you 14.6 million people have COVID in the world. The US, and North America, Europe, Russia, China, you can't believe China, and even Canada, you have 111,000 people. So COVID is a major problem. So what is the government doing? The global response has been more than $10 trillion governments have poured into the economy. The Fed is holding a record 6.6 trillion. This could move up to 10 trillion in the coming months. European Union, Germany put 825 billion, France 580 billion, Italy 240 billion, ECB 824 billion on top of the 130. So that's $1 trillion there. China, almost $1 trillion. Japan, another trillion. So there are lots of money going into the economy, into the global, to help people who have no jobs, to sustain them, to protect them, to keep them sane. So that is the alternative that the governments have come. Now, what about the solution? To kill the plague, a vaccine is needed. So let's look at this chart here. There are 140 teams of researchers around the world looking for a solution. 19 are in phase 1, 11 in phase 2, 3 in phase 3. Nothing has approved yet. Yet, researchers around the world are racing. Vaccine normally requires years of testing. But you know what? The focus has been on finding an answer. And today, 20th of July 2020, preliminary results from a combined phase 1-2 trial of the University of Oxford generates a strong immune response. The UK government is buying 90 million doses of 2 different vaccines. So the target date for a vaccine seems to be anywhere between the fall of 2020 and the spring of 2021. We are that close. Yet is anybody telling you as an investor, look up? There is a great opportunity for you to make a tremendous return on your investments. No, they're not doing that. You know, after the sell-off, 7,000 point sell-off in March, in July, we are now sitting at 16,000. So 5,000 points, it has already come up. You only have another 2,000 points to go up to reach the 52-week high. Now, let me tell you, as soon as the news of the vaccine hits the streets, you are going to see a rocket in the stock market moving. Millions of people will be rejoicing because you will do away with mass social distancing. All this stuff will be gone and business will become back to normal. That's what these talking heads are not telling you. Instead, they're whining about Black Lives Matter, Blue Lives Matter, KGB, CIA. Who cares? That's not important. What's important is, where is the market going? Where is your investment going to do? January, February, March, April, May, June is gone forever, never to return. August this year. What are you going to do? Are you going to sit by and watch the world go by? Or are you going to continue to pat your financial planner and say, it's okay, steal my money, it's all right? What are you going to do? The good book says, leave an inheritance to your children's children. Let me give you an example. On July the 1st at 8:55 a.m., we sent out a suggestions of 4 stocks: WN, which owns Loblaws, QSR, which owns Wendy's, CTC, which is Canadian Tire, and you probably don't know this, FSV. I told them to buy at these prices. Remember, we said plus or minus, so it could be $99 or $101, and sell at these prices. And if the market turns, we say put a stop at these prices. Take your losses. Small losses are fine. So what happened? So on July the 3rd, we bought WN at 99, and July the 14th, we sold it at 103. We made $4 or 4% in 11 days. QSR, Wendy's, we sold it at on July the 13th at 76.50, having bought it at 73.50. $3 gain, 4%, 10 days. Canadian Tire, $116, sold it at $117, $3, 3% profit, 13 days. FSV, $133, 138, $5, 4%. We made $15 profit in 11 days. Now, if you bought 500 shares at $15, you would have made $7,500 in 11 days. How can somebody do this? Very simple. They learned how to do it. If you don't read the manual, can you put something together? No. So that's what we do. We teach you. And if you don't know a certain area, we have a coach that helps you. We walk you through. Husband and wives learn together. Here are some testimonials in May that we picked up from. This is May, when the market was really shaky. So the first one, month of May, 23%. The second one, TFSA self up 12%, husband up 16%, cash account up 24%. May the 14th, portfolio up 22% in approximately 2 weeks. Couldn't believe it, 26.7%. The evidence demands a verdict. These are not PhD students or nuclear physicists. These are housewives. There's a grandma there. There's a farmer. There's a truck driver. Simple people making excellent results. Why not you? So don't waste your time. Give us a call at 204-414-9106 or email us at admin@train2invest.com. Get started. Learn something new. Don't say it cannot be done. Do you know that in 1902, they said man could not fly? In 1903, the Wright brothers showed that man could fly. 66 years later, man landed on the moon. In one generation. Just think about it. Why not you? Thank you for listening.